China's economy. What are the challenges and the outlook for the rest of 2022? Hello, I'm Arnold Snyder, and this is The Heat. With economies under stress across the globe, there is growing attention on China, the world's second largest economy. It too has been dealing with pressures as it recovers from the COVID-19 pandemic. Will it bounce back with a strong performance for the remainder of the year? We will hear from our international panel of experts in just a few moments. But we begin with a major international trade event now underway in Beijing. CGTN's Liang has this report.
Themed as Cooperate for Better Development, Innovate for Greener Future, the 2022 China International Fair for Trading Services is showcasing cutting-edge technologies and green development solutions, as well as scenarios of global leading enterprises in the service trade sector. A total of 65 countries and international organizations are attending this year's event, and 10 of the countries, including the United Arab Emirates, Switzerland and Italy, have exhibitions for the first time in the name of their countries. International organizations such as the World Meteorological Organization and UNESCO are also showing their diverse cultural elements. This year, the United Arab Emirates is the guest of honor country. The UAE is showcasing its aviation services, financial services, advanced manufacturing, and cultural services of a diversified economy. And this year, for the first time, a thematic exhibition on environmental services is a new addition to the grand gathering, focusing on low-carbon energy, carbon neutrality, and green development. Having successfully hosted the 2022 Winter Olympics, Beijing's area for sports services has become the largest during this year's fair.
We are very happy to be here to speak about our new project. They have a lot of coming projects in China in more than 11 cities.
So this is a key event for the international companies like us and the Chinese partners. So we believe that such event will help to develop new routes, new collaboration and new opportunities together and make the world of tomorrow.
This year, the event will continue to create an online plus offline three-dimensional display space for unique presentation due to COVID-19 outbreak. The exhibitions will run through September 5th, and 7 summit forums, as well as over 100 thematic gatherings, can be expected. Yang, CGTN, Beijing.
Time now to hear from our panel. Joining us from Beijing is Gong. He is a professor of economics at the University of International Business and Economics in Beijing. Joining the discussion from Miami is Quelch. He is Dean of the University of Miami's Herbert Business School. And from Portland, Oregon, with us too is Liang. She is Endowed Chair and Professor of Economics at Willamette University. Welcome to all of you to the show. Gong, let me start with you. You are back in Beijing. Let's start with this major trade show that is happening in the city. It's known as the 2022 China International Fair for Trade in Services, or CIFTIS. As it's been called as well. And as we just heard in that report, there's something like 65 countries that are attending this event. How important is this major international trade event for China, and what's the message that it's sending?
Well, I think the importance can be characterized by the scale. Reportedly, 2,400 companies participated, including 400 out of the Fortune Global 500 companies have exhibits and other products on display at the show. And I think this fair is about service trade. And service trade is increasingly an important component of China's international trade picture. And I think it's significant not just for China, but also for other countries who would like to export their services into China, including services created in their own countries, actually. China has, as you know, China has a huge trade surplus in goods. something like $500 billion. There's a lot of money there. But our service trade is actually having a trade deficit in amount about a little bit over $100 billion. So, you know, it's a very large market. And you know, for companies that are, international companies that are interested in increasing their exports to China, and this is a very good venue to display what they have to offer. Let me also emphasize very importantly the importance of you know, exporting into China with services in your own country. For example, offering services like education. You know, we have a lot of students from China going overseas. Travel, you know, unfortunately, right now, the travel industry is still very much hit by the COVID situation in China. So Chinese tourists are not going out of the country. But as soon as this is gone, that should be a huge market, in my view.
So looking at this, John, as I said, 65 countries, as you pointed out, 2,400 companies there. Is the basic message from China, we are now open for business?
Well, I think it still very much hinges upon the situation with the COVID in China. It's COVID, and we've been in this situation for how many years? You know, 2.5 years, more than 2.5 years. And I think at some point, this has to stop. I mean, you know, reportedly over 80 countries have already got rid of all the COVID-related measures. And of course, you know, in China, our government and people here tend to have a little bit slightly different view about life, about the COVID control. But I think the trend is there. I mean, this virus is transforming itself. It's not as threatening as it once was when it first started out. And I think it's just a matter of time that China is going to follow suit with the rest of the world.
All right, at this point, let me introduce to the show Edward Say. He joins us from New York. He is the founder and CEO of the from Hong Kong. My apologies. He's the founder and CEO of Feng Company. Edward, great to have you with us on the show. This event that we're talking about, CIFTIS, this trade event that is taking place in Beijing right now, President Xi Jinping addressed the event via video on Friday and said that it shows China's willingness to help the world recover from the pandemic, and as we know, that there are economies around the world that have suffered because of that pandemic. What is the significance of China's push to continue opening up and promote recovery at a time when we know that global economies are facing a lot of stress around the world?
Yeah, hi. Thank you for inviting me to be on your show. China is a major trading nation. Is the largest trading partner, or one of the largest trading partners for many parts of the world. As we are, you know, being hit by the pandemic for over, you know, a couple of years, the rest of the world, including China, has been somewhat adversely affected by the pandemic, and the economic condition generally is not that good. Therefore, China's role in the global trade is increasingly more important. So the need for China to really get out and be more proactive and to ensure that the global trade will go on in a reasonable manner will be very important. And I believe that that's the spirit of what President Xi was talking about.
John Quelch, China continues, of course, to champion globalization as well as multilateralism. But as we are seeing now in some parts of the world, we're seeing the barriers of protectionism going up. How would you assess the state of the global economy right now? What are your major concerns?
Well, first, whenever there's a prospect of recession, there is always the specter of protectionism and nationalism. And my belief is that we must assert the value of global trade and cross-border investment, not only because that is a fuel for competitive efficiency in the world economy and increased productivity, but also because those cross-border trade and investment interactions are probably the best guarantee that we have of peace and prosperity. So at the moment, of course, the global economy is on the verge of recession, or according to some, in some countries, is in recession. And therefore, the engines of economic growth that's primarily the United States and China, have to step up to do their best to ensure continued economic momentum.
Liang, of course, China, like other countries, have been facing a host of challenges. I talked about the pandemic earlier on. China's also been facing climate change challenges, if we look at the heat waves, drought in the country as well. But there are some experts, some analysts, who say that the country is going to be performing a lot better in the latter part of this year, in the second half of this year. What do you see ahead?
Good to talk to you again, Anand. I think many commentators are worried about China's growth, the slowdown. But let's not forget, if you look at August number, the composite PMI, the Purchasing Manager Index, is still at 52.7, which is 52.6. Sorry, it's still in the expansionary zone, which means the economy is still expanding, maybe at the pace that people would like. But that is really against a very tough August. We had really bad heat waves, as you talked about, worst since 1961, and one of the worst droughts in history as well. And that really hit Sichuan province, which is a big power generator, producing about one quarter of the country's electricity, and send 1/3 of this electricity to other provinces. So taking all this together, yes, agricultural production was affected, but now the rain finally came. In fact, Sichuan, I think, now had a flood warning. So hopefully that would help. On top of that, I think other provinces, especially in the northeast, they were doing fine in terms of agriculture. Industrial production, I think, will resume. That said, the COVID lockdown is still going on now in Chengdu city, which again could take some toll on production. But I think as long as factories are able to remain the closed loop production, and hopefully this lockdown is going to be short, then that would really help the economy to grow in the second half. I mean, the last quarter. Just one quick point on that service sector, service trade. I think it's definitely a welcome message from China in the midst of deglobalization or globalization or decoupling and all these. I think, it's really, if anything, the pandemic teaches us is that, yes, we need to remain resilient, which means we might need to have more food and energy, autonomy. But still, I think that global connection is so important to diversify the risks and to have coordinations to go forward. And I think that is also good for China to boost its service sector productivity and competition.
John Gong, of course, China has introduced stimulus measures. What can you tell us about how these measures will impact its ability to make some kind of meaningful, significant recovery in the second half of the year?
Yeah, okay, so let me first talk a little bit about, I think, the different kind of economic problems vis-a-vis the United States. In the U.S. case, I think it's a matter of overheated demand coupled with high-flying inflationary pressure. In China, I think it's a little bit different. I think the demand is not very adequate, and the way to stimulate that is through fiscal policy. It doesn't help too much just by injecting more money into the economy. People are not spending. Investors or business communities are not investing, and it's up to the government to take the initiative to fundamentally alter consumer and investor confidence, in my view. So I think fiscal policy is still probably the most useful and probably most effective weapon at this point. And I've seen some indications that these projects that are being injected into the economy, mostly infrastructure projects, introduced in the first half of the year, are starting to take a little effect. But I think it's still not very adequate. And reportedly, there'll be more coming out in the second half of the year. And we don't know, whether the effect of that will be enough to turn the tide around. But at this point, probably that's the only realistic hope in my view. Again, I will refer to the COVID situation. No matter how many infrastructure projects introduced in the country, if you have lockdowns or sort of quasi-lockdown situations like that, inevitably it's going to take a toll on the production side. It's going to take a toll on the economy in general. So again, I would say, let's hope for the best that this vicious virus, even though not as deadly as it used to be, would just, we hold it at bay, and hopefully we can carry our life without this damn thing.
Right, it is certainly a vicious virus. Edward, there are some economists in the West who are questioning China's growth forecasts. In fact, there was a report in Bloomberg in its latest quarterly survey of economists. They're now predicting that China's economy will grow by 3.5%, and that is well short of China's hope that it would grow by 5.5%. But with these stimulus measures, could China perhaps outperform the predictions of these Western economists?
I think by around the second quarter of this year, China officially has not used a GPT target for the rest of this year, because the Chinese government understands that it's actually going to be very difficult to have a precise or more or less precise target for GDP. The focus ought to be really trying to use different measures to try to stimulate the economy, given a pretty tough situation, the pandemic that we talk about, the global recession that we talk about, and in some cases the trade wars and so on. So for all this reason, to have a specific target probably is not that meaningful anymore. But with respect to what could happen, I think in general, the West view on China is a little bit more pessimistic than I believe the real situation is going to turn out to be. Perhaps in some corners of China, some people are perhaps a little bit more optimistic than it could be. So in my personal view, the actual outcome for the rest of this year probably will be better than what Bloomberg was talking about. But at the same time, would it be able to reach 5.5 overall? I think it's still a big question.
Okay. John Quelch, what are your thoughts on these growth targets? I mean, do you see China reaching that target, 5.5%?
Well, there's no way we can do that. I'll be... I'm sorry.
Sorry, go ahead.
I think, Anand, we have to put in context the 5.5% in the context of the extraordinary 40-year trajectory of the Chinese economy, which is unprecedented. And so, frankly, if China misses a 5.5% target this year, let's not suddenly throw in the towel and say China's underperforming. China has always exceeded the expectations of the West, and I'm sure it will continue to do that. Now, it is the case that consumer confidence in China tends to be skittish. So with the COVID lockdowns and with any uncertainty in the economy, the Chinese consumer tends to pull in their spending, start saving, and be more cautious. In the United States, on the other hand, where consumers have enjoyed a reliable economy, if I can put it that way, for decades, when there's a downturn, when there's trouble, they don't necessarily slow down their spending, especially if they can dip into their savings. So the U.S. consumer tends to perhaps be over-optimistic in the face of a problem in the economy. The Chinese consumer tends to overreact in the negative when there's a downturn in the Chinese economy. And in both cases, as has been stated, the responsibility of the government is to try and correct that consumer reaction towards a more equilibrium type of position.
John, that leads me to, John Quelch, that is, it leads me to another question. I mean, if we look at what's going on in the world economy right now, we see soaring inflation here in the United States as well as in Europe. We see the fallout from the conflict in Ukraine, rising food prices, rising energy prices. And given that China's economy is so closely linked to so many economies around the world, how important is it for China to be strong?
It's very important that China be strong. and that the Chinese economy be strong. And it's very important that China sees its role in the world economy as one of leadership and positive contribution. Yes, it is important that the circular economy domestically develop in services as well as in goods. But it's also the case that China has, for very good reason, established itself as the factory to the world. And by the way, post-COVID, there's no indication that China has lost any market share of global manufacturing. So the importance of the Chinese economy to the delivery to world consumers of affordable prices for high quality goods, that role that China has assumed continues, and it's very important that it do so. Of course, countries are attempting to onshore and diversify their sources of production and so forth. You know, that's as it should be. But China's role as a manufacturing center and increasingly as a source of innovation both of these roles are exceptionally important to global prosperity.
Liang, there's been a series of reports in Western newspapers about the Chinese real estate market. I'm sure you've seen most of those reports. For instance, there was a report in the Guardian newspaper which said that China is trying to fend off a property crash. I mean, what do you make of this? Is it being exaggerated? I mean, and what can China do to prevent something like that from actually happening?
Right. I think the media's reports have some sort of grains of truth. It is true that the real estate market has been in sort of slowdown or even slump. The housing price has been going down for 14 months in a row. And home sales have gone down by 30% this year compared to last. But I think even for the worst estimate, the mortgage rate, the non-performing rate loan in the mortgage sector would probably reach 800 billion Chinese yuan, which it's pretty much just 2% of the outstanding mortgage loans and 0.04% of the total outstanding loans in the banks. So I don't believe that the media coverage talking about that there will be a sort of financial crisis or meltdown coming in the way. I think that is totally an exaggeration. But it is true that when the real estate sector, which represents about 60% of the household wealth, when that is doing not very well, households could have this negative wealth effect. They tighten their purse string. It also hurts, investments in, especially construction sector.
Yeah.
That said, I think it is time for, China to rethink about, how to redress these questions, these issues in the real estate market. So in the short run, I think the government could definitely do more to help to stabilize the market. And Gong talked about the 19 measures, which was just passed last week. And that included, local government's debt issuance for affordable housing projects and so on, to try to bolster, the market. And in the long run, I think it is true, we should not go back to that over-leveraged, over-expansion real estate market, but find different, motors of growth.
Okay. Gong, China has been pushing back on these reports. In fact, there was a report in the Global Times which said that, and I'm quoting that report, said that Western media are seriously flawed by exaggerating China's real estate woes. What is your assessment?
Okay, well, first of all, I totally agree with Liang that the current quote crisis in the real estate market isn't likely to cause a ripple effect through the rest of the economy, because the mortgage market, the sector itself, is still very much controlled by the Chinese government, and they have measures to isolate individual problems associated with individual banks. So I don't think we're going to see the kind of the subprime mortgage crisis that we saw in 2007, 2008 time, 2009 time. Second, I totally agree that real estate used to be very important in China's economy. 30% of the country's GDP is coming from that. Now, it's clear that this sector is slowing down due to the demographic change. And we're not going to see the kind of real estate boom that we used to see in the last few years.
Right.
China's population has already peaked. A lot of people in China already own multiple real estate properties. So it just is a matter of time how the economy can develop other areas of growth to digest the slowdown in the property sector, real estate property sector.
Yeah.
So 30% is a very large number in my view of the GDP. So I think it's just a matter of time, it's a matter of buying some time to gradually slowing down or decreasing that percentage and devote the investment resources to other sectors of growth in the future. And I think there's a couple of things, things like the environment, things associated with the climate change, and things associated with the digital economy. These are the areas that Chinese companies are actually moving rapidly ahead.
Right.
I'll just give you one example. The electric car, for example. If you see the China's exports as being growing still very robustly in the past few quarters, and I think a huge component of it is driven by exports of electric cars.
Right.
And I think we're still going to continue to see more and more production and consumption associated with that sector. These are the things I'm talking about. I mean, new areas of growth to replace the gradual rollback of the real estate property sector.
Okay, Edward, I've just got a little bit of time left, about a minute, and I want to talk about monetary policy. Of course, here in the United States, we're seeing the Federal Reserve raising interest rates with more to come, but in China, we're seeing interest rates being cut. So in terms of monetary policy, what can we expect from China in the coming months?
Yeah, I think the Chinese government is playing a more prudent monetary policy. Obviously, what the U.S. government is doing is going to have impact on the rest of the world, and including China. But I think I would expect China to take a more moderate stance in the monetary policy and not try to sort of take more extreme actions, as in the case of the United States.
Okay, and that's where we have to leave it. Thank you to all of you for being with us. It's been a great discussion. I'm Anand Naidu in Washington, D.C. Thanks for watching.